As many of you know, Allan Gray is celebrating its 50th anniversary this year, and I've been fortunate enough to be here for just over 22 of those 50 years. And I thought it would be a good time to reflect, my personal opinion, what are the attributes that make a great as opposed to a good asset manager. Up front, I'd just like to say there's not one correct way to manage money. There are people with very different methodologies and investment styles who have produced great long-term track records. But what you do need to do is believe in your method. And why is that? Because I've never seen an industry where the psychological barriers to long-term outperformance are so stacked against you. So you're going to be tested, the market's going to test you, and you need to believe in the way you manage money. I guess the first thing you need is smart, hardworking people. That might sound obvious, but after all, asset management is a human capital business. But many of our competitors who we have high respect for could easily make the same claim. So having smart, hardworking people is really a ticket to the game. It gives you a right to compete. I guess secondly, you also need a philosophy. You need some kind of sort of guiding principles that follow the way you invest. But unfortunately, you can't patent your philosophy, right? It's not like a software firm. And hundreds of books have been written about investing. So again, while having a philosophy is a prerequisite, it doesn't give you an enduring competitive advantage. And again, really just a right to compete in the industry. What is important is to have a process, okay? And so you should be able to explain to your clients in a simple and concise manner how a position came into the portfolio. And I also think the process should have been tested through a full market cycle. And what I mean by that, it should have been tested through a full bull and bear market. And whenever I think about sort of process and simplicity, I always think of our former chairman, Simon Murray, who said, if you can't explain why you own a share in 5 minutes, you probably don't know why you own the share at all. So I think a process is very important for outside people to understand. But perhaps most importantly for me, as I reflect on the last 22 years, is the ownership structure of a firm. The ownership structure of an asset management firm must allow the investment team as well as the business to take a long-term view, both on markets and on its own business. We've been fortunate enough at Allan Gray to have a strong anchor shareholder in the Gray family, which has now become the Allan and Jill Gray Foundation over a long period of time, along with our empowerment partners E2 and current and former executives. They make up the vast majority of our shareholder base. And hopefully those people and entities understand, that investment goes through different cycles and outperformance does not come through in a straight line. In fact, I'm fairly convinced that if you took an average investment team and put them into a proper ownership structure, they would produce above average results. Obviously at Allan Gray, what we're trying to do is to find an above average team and put them in an enabling structure and produce even better results. What's important is incentives. And if we think of everything that's gone wrong in financial services, perhaps post the GFC and the reputation of financial services, a lot of it can be tied back to bad incentives. As Charlie Munger of Berkshire Hathaway famously said, show me an outcome and I'll show you an incentive. So we think very carefully about the incentives between our staff, the firm, and our clients. Now, Mr. Gray always believed that we should work in the same shoes as our clients, and that meant when we're doing well, the clients should be doing well, and when the clients are doing poorly, we should be doing poorly. And I can vouch as a long-term shareholder in Allan Gray, when our investment performance is poor, the profitability of the firm is affected quite significantly. And why is that? It's because the majority of our assets are on performance fees. Now, there's no perfect fees in the market, but we believe that aligns sort of the firm's interests with the client's interests very closely. And as I mentioned, current and former senior executives are shareholders in the firm, and many of them also share in the profits of the firm. So the staff's incentives are aligned with the firm's incentives. And if the firm's incentives are aligned with the client's incentives, that means the staff are very closely tied to the client's incentives. And I think that's been one of our great strengths over time. I guess two sort of more interesting ones that have perhaps become a bit more to the fore recently is you need to represent your client's interests. So Allan Gray as a firm does not own any direct holding in listed equities in South Africa. Our clients are the beneficial owners. So when we are meeting with boards, when we're meeting with management, when we are recommending to our clients how to vote at annual general meetings, we are representing them and we are representing their interests. That's always something that's very important to keep in mind. I think it's also important, and I guess become more important these days, to be a responsible corporate citizen. And what I mean by that, asset management is a business built on trust, and so asset managers should be seen and act, with the highest ethics and integrity. And that's one of the reasons, I'm very proud to work at Allan Gray. We're also very proud, most of the employees, to be working for a firm where, thanks to our founder, we know that a majority of our profits are going towards philanthropic purposes. So maybe just to sum it up, we're very proud that we've been around for 50 years. Our process and our business has been tested through all different kinds of market and economic cycles over the last 50 years. But we're humble enough to know, if you look at the track records over very long periods of time, it is extremely hard to outperform for lengthy periods of time. But when I go and think in my mind about the checklist I've given you about what makes a great asset manager, I think Allan Gray ticks most of those boxes. And while the world is changing at an ever faster rate, I'm pretty confident with the foundations that have been set down over the past 50 years that Allan Gray will be in a good position in 50 years' time, wherever that position may be.